Guide to calculating intrinsic value. Whether you're an amateur or seasoned investor, you need to know what intrinsic value is. Knowing how to calculate it gives you an idea if you're getting a good deal from a stock. It lets you know whether you're overpaying or if the stock is worth your time, money, and effort. Hi, it's me again, Sophie, from Antoaneta's team. Today, we'll talk about intrinsic value and how to calculate it. Don't forget to like and share this video so others can also learn the basics of investing. If you're interested in other similar topics, feel free to browse the videos we've posted on our channel. So, let's begin. One of the greatest investors of all time, Warren Buffett, said that determining a company's intrinsic value as well as paying a bargain or fair price are critical investment factors that you need to consider. So how do you calculate the intrinsic value of a stock? Warren Buffett defines intrinsic value as a stock's discounted value that could be pulled out of a business or company throughout its remaining life. So, when you're evaluating a business, you need to determine how much money it can generate over time and discount the cash flows back to the present day. There are 3 ingredients to help you with this calculation: current cash flow growth rate, and discount rates. How to find a stock's cash flow? Why did Buffett refer to cash flow instead of the more popular metric, which is earnings? The company's management team could easily manipulate the earnings. On the other hand, manipulating the actual physical cash flow that is generated by a business is difficult, if not impossible to manipulate. Simply put, cash flow is more reliable compared to cash earnings. Thanks to the advent of the internet, it's now easy to determine the cash flow. You can visit the website gurufocus.com to get this metric. For this video, we'll take Microsoft as our example. Where to find current free cash flow data? Type in Microsoft Stock Guru Focus. Then go to the DCF, Discounted Cash Flow, section. Check the Free Cash Flow section for the latest data. How to determine the cash flow growth rate? If you want to know the future cash flow of a business, you need to determine the current cash flow growth rate first. So, take the current cash flow of Microsoft. Microsoft's current cash flow is 7.38. What will its growth rate be? You have to look into the past growth rate as it will provide you with an idea of what the future growth rate will be. So, for Microsoft's past growth rate, you need to go back to where you found the data for your current growth rate. You'll find the figures for previous growth rates in 10 years, 5 years, and 1 year. Focus on longer-term growth rates. Microsoft's growth rate in 5 years is 17.5% and 8.8% in 10 years. How to determine the terminal value? Current cash flow and the growth rate are 2 of the important things to consider when determining intrinsic value. Multiply the current cash flow with the growth rate for 10 years. In the 10th year, you will receive another lump of cash if you decide to sell the stock, which is referred to as the terminal value. Find the cash flow that the business will generate on the 10th year when you're ready to sell and multiply it with the company's current cash flow. How to determine the discount rate? The discount rate is the final rate that you need to include when calculating the intrinsic value. The discount rate is the amount or rate used to discount the cash flows to the present day. Generally speaking, it's the realistic return you expect to get from a certain stock. The discount rate may be influenced by the market. If the market is expensive and you expect a 20% return, then you'll struggle to find a stock that fits your budget. If the market is cheap, then you'll have a few stocks to choose from with prices that come with a discount rate of between 5% and 20%. But a 10% discount rate, which is twice the expected market price according to the price, is more ideal to use. Add in the discount rate and you'll get Microsoft stock's current value. Avoid precision thinking. When you're calculating the intrinsic value, make sure to avoid precision thinking. You shouldn't look for the exact figure on the value of the stock. Your calculations should only give you an idea of the stock's value. Warren Buffett said that the intrinsic value of a stock is only an estimate and not a precise figure. It's better to be approximately right than precisely wrong. Once again, You should always calculate the intrinsic value when evaluating a stock. It'll give a feel for the market and you'll learn how to identify undervalued stocks that you can buy. However, you should still consider other factors when analyzing a stock. You need to have a good understanding of the company's business model and depth, its management team, and the quality of the company's business model. Calculating the intrinsic value of a stock isn't that complicated if you know what you're doing. All you need to do is check gurufocus.com to find the current cash flow, determine the growth rate for the cash flow for 10 years, find the terminal value by identifying the multiple which you believe you can sell it for, and work out the discount rate. That's it for now. We hope you found this video useful. Don't forget to like, share, and subscribe. Feel free to drop your comments below and browse our channel for other topics about investing. Thank you for watching and remember, always stay very motivated.